Hello there, Maverick Traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma. And here we are. I cannot believe that we are already through July. We're now into August. So we do have 2 trading days left in July next week. We'll shut down the books, calculate profits, and we'll get distributions sent out. But hey, this was a great trading month and a great trading week. So let's jump into what we're going to be covering in this session. In this session, we're going to go back through the last week, look at the stories that were moving things, look and see how much everything moved. And then we're going to close the books on last week and say, okay, where are we right here, right now? Looking to the week ahead, we're going to go into all of our currencies. We're going to score them from a +3 to a -3. And then we're going to take the best and the worst, we're going to pair them up, and we're going to look for trading setups together.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So let's start off with what happened in the equity market. They remain bullish. Now, there were a couple of times this week where especially the NASDAQ looked a little vulnerable, but we'll take a look at some charts here. The S&P was rock solid. It basically held at a high base and we broke out on Friday. So look, everything is still very, very bullish. We had 3 central banks announced last week and we have 2 central banks this week. We heard from the Fed, the FOMC, and they did exactly what the market expected. They raised by 25 basis points and basically said they might do one more by the end of the year. There was a very little movement. That was one of the most boring Fed meetings that I've seen in the last year or two. We heard from the ECB. They did exactly what they were expected to do as well. They raised by 25 basis points. Their next rate hike isn't as sure. There's been a lot of banks that said, hey, we don't think they're going to raise rates in the next meeting, which was expected at one point. And then really the fireworks came from the Bank of Japan this week. They came out, held rates steady, but they lifted their rate limit on their bond buying scheme. They were basically saying, hey, we'll buy all the bonds we need once interest rates get to 0.5%, to 0.5%. And they've been defending that. Now look, it used to be 0.25%. And then it got so much pressure, they said, okay, we're going to now do 0.5%. Overnight, they said, we're going to have it be a variable rate. They're not going to tell the market where it is, but they're just going to say, we'll do it wherever we want. Now, this caused some big volatility in yen. And I was just talking to Ankit earlier. I saw dollar yen down over 100 pips on Thursday night. And when I woke up, dollar yen was up about 100 pips. Ankit, what did you think about the Bank of Japan news?
I mean, I think the Bank of Japan is still staying on the same path. Again, we are seeing some minor tweaks here and there, but again, overall, they are still committed to what they have been for the past year and a half. So every time I see these tweaks, I mean, I remember back in December 2022, they did tweak the limit at that time from 0.25 to 0.5, and big move happened. But these movements usually settle out pretty fast. So my outlook again, who knows where the yen's going to go, but I think overall there's just not a whole lot that we are getting from Bank of Japan. Volatility-wise, it was great, but again, going to next week, we'll see once this does settle, which way the yen goes. But overall, I'm not really changed on my outlook on the yen.
And as you said, we'll take a look at the yen chart here and see where it's most likely to go. Let's kind of go down what happened last week. Look, the big news was all the Fed statements, but let's pull out a couple of reports that really kind of set the tone. On Tuesday, we got Aussie CPI lower than expected. The Aussie was the worst currency this week. So Aussie CPI lower than expected. And then on Thursday, we got a pretty good number out of the U.S. We got U.S. advanced GDP. This is the first measure of second quarter GDP. Came in way stronger than expected. Expectations for 1.8%. It came out at 2.4%. This economy in the U.S., remember, we were supposed to be in recession a year ago. Everyone said, hey, we're going to get a recession in 2023, probably summer of 2023. Boy, that has not happened. That's why the equity markets are doing so well, because the forecasts were so pessimistic. And 2.4%, that is a good economy. That's a good, solid economy. And then on Friday, we got the core PCE price index out of the US. This is the Fed's favorite inflation number, and you can see that it was lower than expected. Well, again, the headline number was as expected. Employment costs actually lower than expected. The market liked this. Everything is coming out exactly in what they call a Goldilocks scenario. The Fed wanted to slow the economy down enough to curb inflation, but not so much that it sent it into recession. Everyone doubted it. That's called a soft landing. And people say the soft landing is like a unicorn. You can't do it. Well, at this moment, it looks like the Fed has actually generated a soft landing here in the US. So let's take a look at last week's numbers. Last week's numbers, we had the S&P closed up about 1%, the world index up about 1%. Cryptos have been strangely silent. For the last 2 weeks, cryptos have just basically done nothing. They've gone nowhere. They participated in really none of this rally that's happened recently. So until that changes, we really have to be backing off of crypto as any sort of trading vehicle. Gold was flat. Oil had a great week. Any of you who are equity traders, I am bullish in the energy sector for the first time in 2023. First time I've been neutral and short that sector for 7 months now. I'm definitely changing my outlook on energy as we're seeing oil back up above $80 a share. We take a look at the S&P chart. The big thing that stands out on you is that big, huge red candle. We got a gap up. We got a nasty sell-off. This is a bearish engulfing candle. And most of the time, after a significant run like we've seen, this marks a top. I mean, take a look. This isn't an engulfing candle, but we have a similar type of candle. We typically see pullbacks after this. We did not get a pullback. The strongest stocks, the strongest markets, they don't pull back. They base. And that's just what we're getting here. We're getting a high base. Now look, I'm not saying that we're going to break out and run this next week. A lot of times we need to base until the 20-period moving average catches up to it. We may go sideways for another week or two, but the market are telling you that the next move in equities is to the upside. August is traditionally a very bullish month, but with less volatility than other months, meaning it's a slow grind higher. That's what I see for equities, is just a slow grind higher. Let's take a look at the performance in Forex. I mentioned earlier the Aussie was the worst currency last week. I took 2 trades last week, both short Aussie trades, and they were both really nice trades. We'll talk about that in just a little bit. Yen was the big winner for the week, but we'll take a look at the chart. This was really just due to some short-term volatility. I don't think we can say the yen has all of a sudden become the best currency out there. Everything else was fairly muted, but again, I want to point out, we took these numbers from Sunday to Friday. There was a lot of movement in these currencies. This was a really good trading week. Typically, when you see numbers like this, you say, we were pretty flat for the week. Look, things ended up where they started, but it was definitely not flat for the week. Swiss franc was on a tear through most of the week and then cooled off a little bit. So Swiss franc was great. Pound was actually weak for the first part of the week and then was on a tear the second part of the week. It was a very, very good trading week in currencies, even though we didn't see really big movements on a weekly basis. We talked about crypto. Crypto down 2%, 3%, 1% Ethereum. This is a really boring set of numbers here on crypto. We'll take a look at the charts and we'll see really is nothing going on in crypto to get really excited about here. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? All right, so we already took a look at the S&P. Let's take a look at the 10-year bond. I met with our stock and options group, and we really talked about how 4% was a real issue for the stock market. And remember that big red candle we got on Thursday? This is the primary reason why it happened. We popped above 4% on the 10-year. And we gave up all of our gains and went negative. And then we got the core PCE price index on Friday. And all of a sudden, the yields come back down below 4, and all of a sudden the equity market is happy again. The way that this kind of thing works is, imagine you are a parent and your kid keeps breaking rules. And the first time you're really mad at the kid, and the second time you're pretty mad, and by the third or fourth time you're like, I'm tired. As long as they don't break this rule, I'm okay with it. And you kind of give up on that rule. Now look, that was not an example of good parenting, okay? For any of you who are going to be parents or are new parents, I'm not saying that's how you should do it. But those of us that have been parents, that's reality. These kids wear you down. And that's exactly what happens in the market. The market keeps pushing these boundaries and people freak out, and finally they're exhausted at 4%. And at one point, these yields are going to tick up above 4%. And the market's just going to say, fine, we just don't want it to go to 4.5%. We don't want above that. We will start to be getting more comfortable with these higher rates. So that 4% line, I think, is going to become less and less important as we move on. Here is the cryptos. This is our crypto basket. And you can see nothing. There is no reason at all to expect there to be a huge move. Now look, if we can break out above this upper line here and above moving averages, okay, I'll start to talk about cryptos again. But until then, I'm telling you, you just want to ignore these. Just ignore them until they are in a better position. Now, last week had some really big news, and usually we get like a big week of news and then we get a break. Not this week, because we are now into the first week of the month, and we always have RBA. So there it is. We have the RBA on, again, Monday night. It's on Tuesday at 12:30 a.m. Eastern Time. For all of us in the North Americas, this is Monday night. So RBA statement there. As you can see, we've also have Kiwi. We've got the New Zealand employment report on Tuesday evening as well. I really like Aussie and Kiwi for trading here. I think both of them look really, really good. We'll take a look at their charts. Oh, I forgot to mention Sunday night. I talked about this last week. I'll talk about it again. These numbers coming out of China, I think, are going to be market movers. I don't typically trade Sunday nights. I start looking at stuff on either the European Open on Monday or the US Open on Monday, unless there is some news that I think might move markets. And I do think this China manufacturing number might move markets. Now, we got the Caixin manufacturing number last week, and that is the private number. People trust that one more than the government number. So I was on watch last week. Nothing really happened. So look, I'm going to be at least watching it, tuning in, but I'm still planning on not really getting serious about looking at things until Monday. As you see here, we've got Bank of England. We got Bank of England on Thursday. They're expected to raise by 25 basis points. We've been getting all of these 25 basis points rise, and really nothing has happened with the currencies. I think we're in the same place here with the pound. I think everything goes as planned. It's as expected. And when everything is delivered as expected, the market has already priced in what is expected. So I don't see a huge move. Now, if there's something different, that's when you get big moves. But at this point, all central banks have been delivering exactly what the market has been expecting. And then it is the first Friday of the month, which means payrolls report out of the US and Canada. We will be meeting live for this one. So Maverick traders, come and join us live. We'll be trading this report with you. So let's wrap all this week up. We think equities continue to the upside. There's really no reason. If we do get any sell-offs, it's probably going to be a 1 or 2 day sell-off, and then we're right back up. We've got RBA Monday night / Tuesday morning. We got Bank of England on Thursday, and then we already went through those economic reports. So let's go through currencies. I'm going to go through cryptos with you because I'm going to go through them very quickly, and I'm going to turn it over to Ankit to go through Forex. So let's start off with the cryptos. Is there any of the cryptos? Now, as a basket, they're not looking like they're doing anything. But is there one crypto that's maybe giving us a good opportunity? So let's go through them. Here is Bitcoin. You can see here we've drifted down. We're now trading at a 50-period moving average. Here's the question. Do I want to buy Bitcoin here? I do not. Now, look, I am interested in the fact that it is at its 50-period moving average and it's holding that. That's nice. If I get a couple green candles, I'll be like, oh, now I can start looking at it. But right here, right now, it's at a 0. I come over here to Bitcoin Cash, same thing, just hanging out. Just hanging out between moving averages. That is not a good place to be hanging out. When you have one moving average going down, one moving average going up, and the price is sideways, that is what I call a nothing burger. There's no reason at all to be looking at it. Ethereum, same thing. Price between flat moving averages, no thanks. I don't like trades that don't go anywhere, and it takes away the opportunity for me to deploy that capital elsewhere. I really work hard on staying out of sideways trades and positions. And here we have Litecoin, same thing, 0, 0. So for cryptos go, we need to see some momentum come into them before we can get excited about trading them. Ankit, will you take us through Forex?
Absolutely. I think in the currency market, one of the things that we're noticing here is there's a lot of range-bound price action. And I think that's where we are in this summer trading environment. Take a look at dollar. I mean, dollar has been sideways. You know, we had some moments where it looked really bullish and it looked really bearish. But overall, you'll notice that things just stay in this little range there. So overall, my outlook on the dollar is that just trade the range, and I think that's really my sort of an outlook for a lot of these currency pairs, just to kind of trade that range. So right now, where we are, we're still below the moving averages. The momentum is nicely up on the short term, so I think it's the dollar is still looking much better. I mean, it's above the 20-day moving average. I have to wait and see what happened next week with the bond yields. But I'm pretty much in the middle here for the dollar. I'm willing to trade it either way. As these trend scores are sitting at a 0, that's what we're going to focus on. When they're at 0, we can kind of trade it either way. So just like this week, we had good shorting days on the dollar and good buying days on the dollar. So I think that's really where we are at with the dollar. Now the yen is, on the other hand, is a different picture because here we are. Yen has been in a downtrend, but look at that spike that we had last night. I mean, for the first time, notice that we have been below the 20 and the 50-day moving average, and it really gave that glimmering hope that maybe this is where yen can recover, but that was not the case. So yen has fallen back below, and we'll have to wait and see what happens next week, but I think this is a pretty confirmation candle here that maybe this up move in the yen is over in the short term. So once these central banks are out of the way, we will likely to see these currencies kind of fall back into its usual pattern, which for yen, that has been on the downside. So I think I'll be looking at some of the yen shorts into next week. Now, there are certain currencies that, like I said, they can be played either way. Swiss franc, it's not really that case. Notice that Swiss franc just runs and goes sideways. And in between, I mean, there were 2 big candles that made you think, well, maybe this is the turning point. And those big two down candles, I mean, looked like it wanted to roll over, but it did not. And just like Rob said earlier, stronger trends tend to go consolidate and then run higher. And that's exactly what we're seeing. Can I agree with that move? That's a whole different story. But at the end of the day, we just got to trade the charts for us. For the short term, momentum is not there with the Swiss franc, but that's just got to keep that in mind, that this is a currency that trend score is still sitting at a +3. So you want to play it more on the long side than on the short side. But any of the currencies that are not so strong with the trend score, I think that you can treat it differently for those currencies. Now, looking into euro, and again, that was a pretty volatile week in the euro. You can see that we did pull back. So I want to highlight last week. We had a two sort of picture with the euro. We started off with some very weak PMI numbers, and that really resulted in weak euro. As you can see that we had a one up day and then a big down day right after the ECB press conference when they raised the rates with a pretty big turnaround. We caught a very nice move yesterday in the ECB class, but you can see overnight it had a pretty sharp reversal. So I mean, this is also a currency that's kind of flip-flopping back and forth. Overall, the euro has been an underperformer compared to the Swiss franc. So I would say, if I have to take a look at chart on the shorter side, I think the euro looks like a better play. But I mean, look at that reversal candle that we're getting today. So I have to pretty much wait and see what happened next week. I had a better opinion yesterday and going to last night when euro was actually underperforming. But this is a very sharp reversal or bounce that we need to consider as we go into next week. So shorter term, positive momentum. And I think that's really the theme as we go into the pound is the European currencies bounce. I mean, take a look at that. I mean, the pound at one point looked pretty weak. I mean, it looks like it wanted to break lower. And again, if you look back in time, we haven't really broken below those two moving averages as clearly. So here we are back in the range again. I still think that the resistance is still there, the long-term resistance. But it's a very nice bullish candle for this week, I must say. So what is it telling you? That the buyers are still there. That's what it's telling you on a down day or wanted to break lower, but the buyers came in. So I'm going back to the bullish sort of outlook going into next week with this sort of a recovery here. Now, when we take a look at growth currencies, that's where we get a mixed picture. So I want to first highlight that CAD has been an interesting play. Sometimes trading is on its own, and sometimes it's just doing what the dollar is doing. Looks very similar to the dollar. I must say in certain parts, this is doing a little bit better than the dollar, but this is really a back and forth play. It's not clear which way it really wants to go, but we have this wide range to trade with. Again, look at the trend score, 0. Looking to play based on relative center weakness. If it's strong, I want to buy it. If it's weak, I'm going to sell it. That's how it is. We're not committed to it long term. I think these are good short term plays, but these are not the plays that you want to get married to because the trend score is not really there to support it. So anybody that's trading on daily charts, this is not the right time to play that. You need stronger trend score to play the daily chart. Aussie and the Kiwi, I want to highlight the exact same thing. Even though we are at a -2 on the trend score, but you got to realize that in the grand scheme of things, we are back at the bottom out of the end of the channel here. This is also not really moving exponentially as far as the trend goes. I mean, if it breaks below the June lows, I would be a lot more excited to play that directionally. But I just got to realize that we just tested that support from June. We might go into a bit more weakness next week, but we'll see how the price action comes after the RBA, which expected to raise rates. So that's something we'll have to kind of wait and watch. But you can see that it had some positive momentum and some negative momentum. Right now, velocity is making a nice little base. So that's what you got to do. You got to trade these momentums, but you have to be very clear on the timeline. Short-term trades, great. Do we want to be caught up in long-term? I mean, we have to kind of wait and see for that. And just in the segue for that, I mean, take a look at Kiwi. Very similar example. Last week, Kiwi was the weakest currency. And so if you look at Kiwi being a weakest currency, you would think that, well, this week should be the worst time for the Kiwi. Well, Kiwi was actually flat. So again, this is the nature of these, range-bound currencies is that it's not giving you a good, strong trend. So everything looks great and it just reverses or the momentum shifts. So I think as a trader right now, especially going into the month of August, we got to rely a lot more on momentum. We got to rely on, wherever is the momentum shifting, we want to shift with it because that's what it is. Not everything is moving at the same time. Last week he was moving. This week Aussie was moving. Next week we'll see what else moves. But that's what you got to look for is that what's on the move and play that. Trend score, you can see that there's a lot in the middle. The euro and pound is a +1. Aussie Kiwi, even though they're a -2, I just highlighted that they are not they're slightly -2 because they still have to clear some important support level to really make it trending. Remember, in a trending currency, we need a higher high and a higher low. In a range-bound currency, we bounce off the support and the resistance level. The only currency that's the shining star here is the Swiss franc. But again, that's really where Swiss franc is also consolidating right now. And the velocity, you can see there's a lot in the middle. But you got to realize that on a day-to-day basis, these things are shifting very fast. We had the euro was -2 yesterday, and it's +2 today. Same thing with the with the dollar and the CAD. They were -2 in one day, and they're +2 the second day. So this is the market environment. I'm looking for more shorter-term opportunities, looking at the momentum, and take it day-by-day basis. I think that's the best way to trade these markets and not really get caught up long-term looking at fundamental analysis, because we are seeing traditionally exactly what we saw last year. We are seeing the central banks raising rates, but realize that the markets are not moving the same way. The currencies are not moving the same way. So you got to trade the markets in front of you. That's what I got, Rob.
Ankit, I love your analysis on Aussie and Kiwi, and I'm going to completely agree with that. Right here, right now, when you take a look at where the market is, and we always talk about trade the market in front of you, and right now, Aussie, Kiwi are weak. But remember, we're going to do this whole thing again next week. And the question is, are Aussie, Kiwi going to stay at -2s, or are they at levels to where they actually might bounce off those levels? And both of these currencies are at key support levels, and we got a long lower shadow on Friday and actually a bounce up near the close. So yes, we have to trade the market in front of us, but we're also looking to analyze where these currencies are going to be maybe on Wednesday, on Friday. And I agree with you, Ankit, that right here, right now, the Aussie, Kiwi look the weakest. You should absolutely be short them on Friday. The question is, should you be short them on Monday? And I'm in the opinion, just like you, that no. So if that is the case, we don't want to really be short Aussie Kiwi until we see further breakdowns. We're really left with one currency to short, and that's yen. And that's what I'm going into this week looking at is short yen trades. And the question is, what do I short them against? Well, the strongest looking stuff right now is the European currencies. So let's take a look at some euro crosses versus yen. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? But before we jump into just yen crosses, I really want to look at things and say, okay, what is the strongest European currency at the moment? Now, this is a daily chart. I'm going to go to something a little bit shorter term, like a 4-hour chart. And I'm going to start pairing up the euro currencies against each other. So I'm going to look at euro Swiss franc. Now, here we have the past week. The past week, euro was way weaker than the franc. But take a look at the last 2 days. It has clearly changed. It has clearly changed that right now, if I wanted to either go long or short this currency cross, I would go long. All the momentum is to the upside. EMA is now turning up. Look at this. RSI taking off above 50. We got parabolic SAR looking good. So the fact that I would buy euro Swiss franc means that when I'm looking to pair up something against the yen, I should go with euro, not Swiss franc. But let's talk about the pound. What about the pound? Is the euro stronger than the pound? Because if the pound is the strongest currency, then we should take that one. And you can see we come in here, look at this, and EMA is flat, RSI is flat, everything's flat. So basically it's saying the euro and the pound are about the same. So look, you could take a look at some longer term charts and try to determine, okay, where's, which one looks better at the moment. You can see it's right between a range. There's really, to me, flipping a coin to which one is the best. So let's go pair up euro. Again, and as I'm saying here, euro and pound at this point look like the same trade. They look like the same thing. So here we have a daily chart. You can see that we hit this resistance up here twice. We hit it once here, hit it twice here. We came down. We did pierce below this support very quickly. You can see it recovered very quickly here. So for me, I'm going to say that that support did hold. That support did hold. And okay, I think we're going to make a run back up to this 157.80 area. So I like euro yen on a daily chart. Here's the question is it ready to go? Is it showing me momentum right now? And we just got a turn in the 13 EMA on a 4-hour chart. We just got the RSI poking its head above 50, which we like. We've got a parabolic SAR signal. Everything looks good here on euro yen. However, I don't think you can go any higher than this resistance area. I think any target above that is wrong. I think you've got to be down here a little bit more reasonable, somewhere out the 157 area for a target. Now, I said earlier that the pound and the euro look about the same. Look, it's somewhere during the week, we'll have the answer to which one was better. We just don't have the answer right now. But if you take a look here, we've got pound did a little bit more technical damage with some weakness, but recovered very, very quickly. We do have a bit of resistance right here, right now. So when I'm looking at a trade saying, okay, which trade has more to run before it hits into resistance? I'm going to go with euro yen. So for me, euro yen is the trade at the start of the week. Are there any pairs you want to take a look at?
Actually, no, not a whole lot, because again, I think this is the game here. It's not as much about the technical setup, but it's just about what's moving and where's the risk and reward. And we have had great opportunities both ways. Yen crosses definitely looks interesting to me. I mean, if you take a look at dollar yen, probably if you want to pull that up, and that's also, I mean, look at the range. That's the exact level that we were at, about 142. We went all the way down to 138, and now we're 141. So, I mean, if we can continue breaking above that, I mean, look at that trend that we were in, and I think we can kind of resume that uptrend here. And again, that could be the case for a lot of these yen crosses, just not the dollar yen. I think what you really need to do is first find out one currency's direction. Then the second job is to find out what's moving. So if the dollar is moving, dollar yen is great. If the Swiss franc yen is moving, Rob, you want to pull that up? I mean, same thing, Swiss franc yen, very strong price action, and look at that. 4-hour chart, we reversed very nicely. But I mean, this is the currency pair that's not too far off from its previous high. If you go on a daily chart, that was just a little blip on that chart there. So, this thing off 400 pips from that high, and then reverse very quickly here. So, I mean, just looking at this, I think we just have to find out what currency is really moving next week and pair them accordingly. I really like trading news events right now, because that's really where we get these bursts of energy. I think that's where we are going to be active around. But yeah, I'm going into this week just looking at what's strong, what's weak, and not really being committed to any currency. This is a time where we can be flexible. It's not the same as like last year when things were just one way. Now we are getting in this environment where things are just going back and forth all over. So just like how Rob, you showed it, like Euro Swiss franc, when you see those turning points, we need to make sure we are turning with those key events too. So we'll see what's in store for us next week, and I think that's the kind of activity we're looking for as we are in this peak summer trading environment. And once we get past this summer trading environment and we get back into September, I mean, it can be a whole different ballgame. But this is a game we got to play for the next 4 to 5 weeks. Back to you.
Well, as you said, Ankit, it's a busy week. Lots of news. So stay tuned. Be focused on what you're looking at. And, like Ankit said, there's only a few currencies that are actually trending. Everything else is pretty range bound. So you've really got to pick your shots here. You got to really have the right time frames. If you're trading two currency crosses that are range bound, hey, that should be a much shorter time frame trade than looking at something like, hey, I want to be short yen for the week. It's a totally different ballgame. So just make sure your time frames are matching up correctly. Well, that is the Currency Room. Thank you for joining us. Everyone have a great weekend. Goodbye, everyone.